Hi there. A very good evening to all of you, depending on wherever you're watching me. It's good morning, good afternoon to all of you. If somebody is from the other hemisphere. So I'm here with another video, and this video comes after weeks. So I apologize for that. Hopefully, I'll be more consistent from here on in. Today, I'm going to talk about whatever I feel with respect to all the asset classes, markets, etc. And I'm going to talk straight from the heart as to what I believe that all this volatility and whatever that is going on across the globe with respect to Bitcoin, with respect to stocks, US markets, gold, etc. So we'll talk in detail about that rather than talking of specific stocks. I'll more or less talk about these aspects from now on my channel. I'll talk about stocks, yes, in 2-3 videos a week, probably 1 or 2 videos, but mostly my discussions will be on the macro trends, will be on the other assets as well, namely you have gold that is surging and that is doing well. You have Bitcoin that has plunged. You have other markets as well, global markets. So we'll talk about them, especially US, and how things are shaping up. And of course, in tandem with that, I'll definitely talk in detail about the Indian markets and how they are doing and where do we stand. So let's get started. First of all, a disclaimer: this is not a stock recommendation. People taking any position or any share that I talk about should that with their own due diligence and research, and I'm not in favor or against any company that I talk about. I'm not a member of the NSC and BSC, and that I'm not a portfolio advisor. Whatever discussions I have with respect to markets or stocks is purely on the basis of my experience in the market over the last 12, 13 years. And whatever decisions with respect to investments you take, kindly do take that on note that is laden with market risk, and do consult your financial advisors before doing that. So before I talk about the markets, here's a small request, and thanks to all of you who are supporting me on Patreon, on YouTube, and on WhatsApp. So you can be members there, and from now on in, I'll try to make at least one video, hopefully 2 videos a month, which will be exclusively for Patreon members. I'm working on that, and hopefully from this month, or at least for sure from next month onwards, I'll be looking to put up that exclusive videos on. So that will be there. You will have access to my portfolio analysis on different companies, discussion on domestic and global economy. Whatever queries you have, I do answer that. So we have discussions, and plus a watch list that is I keep posting a 30 stock, 30-40 stock watch list every 2 weeks or so. So that's there. So do check out my link if you want to be a member. If you want to be a member on WhatsApp, you can message me for that as well. Now let's talk about the market. So I'm going to begin by the gold thing. So everybody is talking about gold. So what we are going to discuss today is the S&P 500, or the US markets per se, not the Nasdaq, but S&P, in terms of their earnings and where it stands. Compare that to what Nifty is doing at the moment. So if you look at the Nifty 50 index, that is also there, and that has nearly gone to the highs, and but the FIIs are selling and selling big time. So we'll discuss about that and why they are doing that, and how the valuations match up on both the S&P as well as the Nifty. And we'll definitely talk about Bitcoin, which has had a relief rally kind of a thing this time around, from around $80,000 2 days back. It's now back up above 87,000. So that's a relief rally in itself. So we'll discuss about that as well. So we begin by gold. So I'll talk about gold. I'll talk about the exchange rate as well, because now we are touching 90 rupees to a dollar. I remember that it used to be 90 rupees to a dollar, not to a pound, not long back. That probably 8 7 8 years back, we used to be 90 rupees to a pound 10 years back, and now 90 rupees to a dollar. That has completely surged. So we are in a situation where dollar overall against all other currencies are weakening, but for India, this is a troublesome period. Oh, from the end of October till now, what has happened? How dollar has surged against the rupee, and how rupee has depreciated. So that's at 89.60 at the moment. That will have its own repercussions with respect to the Indian markets. So that needs to be looked at definitely. But let me just go through gold first of all. So gold is currently around $4,065 an ounce. This is ounce dollar value, and it touched a high nearing $4,400, 4,380, and now is meandering around it. I believe that this is not the end of the run. I believe that we could have another surge, and we could see 4,800 to 5,000 on gold over the next year or so, probably 2 years time. Next 1 to 2 years, 18 months, we could see that, and from there probably it will stay in that vicinity of 5,000 to 4,500, 4,400 USD for about a considerable period, probably 4, 5, 6 years. It will be like that. So if you take a look at the long term chart of gold, then there have been periods uh, lately where gold from 2011, if you see, it surged to around $1,600 or so, 1900, $2,000, and then capitulated towards 1,200, $1,100 or so, nearly $1,000 from 1900. So it's not all hunky dory for gold. And then eventually from 2020, after going to a phase in 2017 where it got crushed to around $1,000, then it came back. So from $1,000 or so, it came back to see those levels of around 2000 or so in 2020. In the pandemic phase, it reached to that 2000 level. So 10 years, 8 9 years, gold did not perform. Gold did not perform for a 9 year period. Gold has performed exceptionally since 2020 till now, and probably could continue to perform in the next 2 2.5 years, going towards those levels of 5,000, 5,200. And then from, I think, 28 onwards, gold should be in a situation where it will go into a 10-year lull. It would probably stay between 4,000 to 4,500 USD. Why has gold surged? This is interesting. Gold has surged. Normally, that happens when there is extreme uncertainty. So, if you understand what is going on economically globally, not in India but globally, especially in the US, then you would probably feel as if why this is happening. So US debt has now gone past $36 trillion, if I am not wrong. The debt is ballooning out there, and what US is doing is buying or holding more bitcoins, plus they are holding a lot of gold. Now India also hold a lot of gold, and India probably is one of the largest holders of gold altogether. I'm talking of governments, and government hold it, people hold it, and all. Now, if you look, say 6 years, 10 years, 15 years down the line, US doesn't want to be left behind in this race, and uh, the gold is surging, and US believe that okay, if countries like India hold so much of gold, then they would need to find ways of either hold gold at that particular level, or at least around that, in that vicinity, or feel left behind, or have another system in place, for which they are right now working on, which is about Bitcoin. And this that could become a mode of transaction over a period of time. And probably they have a lot of Bitcoin reserves. The United States government currently is planning to get in a bill to buy around 200,000, I think around 200,000 Bitcoin a year, like that, or something like that. And we know that Bitcoins, you can say, total number of Bitcoins that would be in the market is limited to around 21 million. That's how it is, and around 20 million would be mined by I think over 20 million, I think 20.2 million or something like that would be mined by 2028. So there is very less supply of it that would be left. So rather than going after gold, in which a lot of countries like China, India, and many others hold a lot, uh, US is trying to do that in that same uh, in that same, you can say, speed. What they are doing is they are trying to cajole up more gold as well, and there are many countries that are trying to, you can say, countries and governments that are trying to buy more gold, hold more gold, and that is why probably you can say that the supply of gold is not that much as the demand is at the moment, and that's how the price has gone up, even though overall the uncertainty not seems like similar to, say, a Gulf War or a situation in which we had the Ukraine skirmishes, we had a situation with the pandemic, etc. It's not there, but these are the things that is probably you can say propping up gold. Another point here is the weakening of the dollar, the weakening of the currency. You don't feel it because the rupee is weakening even more. So if you take rupee for example, rupee has depreciated at a rate of 4.5%. Let's come back to the US dollar INR. So rupee has depreciated by 4.5% over the last 15-20 years consistently. That's a lot. You would say, okay, 4.5%, how much is that? But that's a lot when you consider that inflation is around 7%. So if you want your child to study abroad, then if you say 7%, around 6-7% inflation, 7% inflation, 4.5% currency inflation, then you're looking at 11.5% appreciation of that fees that you're going to pay for your child, consistently growing at 11.5%. Probably one of your expenses growing at 11.5% year on year for 10, 15, 20 years. That's a lot. If you take 6 years growth of around 11.5%, the thing actually doubles. So that is the kind of effect that this dollar appreciation is having on Indian customers or on Indians, especially those who want to buy anything from abroad, send their children abroad, work abroad, and anything of that sort. So this is a real issue, and that is why people want to buy into asset classes which are deflationary in nature, not inflationary. And dollar itself is losing value in terms of other asset classes, say a Bitcoin or some stocks that perform well, or companies. So you look at Nvidia, and I have in that list, it's up from 16, around $16 to $180 in a period of 3 years, and it's a large company altogether, churning out such kind of results of around $60 billion sales, $55 billion sales in a quarter. $55 billion. Let's just take a breath and find out how much it is. So if you look at 5 billion, it is 500 crore, and if you look at 55 billion, it's 5,500 crore. That is in dollar, and if I multiply that with 88, then you're looking at doing sales of northwards of 5 lakh crore a quarter. That's what they are doing. So what Nvidia is currently doing is equivalent to the market cap of Reliance in a year. That's how much sales that Nvidia is doing. So if you want more perspective to it, so you would say Nvidia is trading at one time sales in terms of Reliance market cap. So if you have a market cap of Reliance at 20 lakh crore, Nvidia is doing sales of 20 lakh crore. That's how it is at the moment, and it is growing exponentially. It is accelerating. It's not decelerating or decreasing. That's how the momentum is in terms of tech, or the tech boom that people are talking about. Bubble, we'll talk about bubble in some other video, whether there's a tech bubble going on there. If you want, kindly do write in the comment box. I will come up with a video with that and my perspective on that. But at the moment, what I feel is that people are looking to get into other asset classes because They know that eventually US will print more, not in December, but probably going down the line, a year down the line, they will print more. There could be a quantitative easing coming up, a QE coming up after this tightening, and hence uh, people are looking at, or investors are looking at other asset classes to look at, probably properties abroad, probably cryptos, stocks that could go up even more exponentially compared to the inflationary pressure of the currency, and so on and so forth. So this is what is going on in the world, and that's why I brought in Bitcoin in the mix in here. Now, where do we lie? I'll come to Bitcoin in a bit, but where do we lie with respect to earnings and you can say PE and valuations of Nifty compared to US? Because there is a lot of talk I'm seeing on Indian television, on different channels, about how the froth or how the bubble is going to burst, or probably it's about to burst in the US because of the kind of you can say exponential growth we have seen in S&P 500, in Nasdaq, etc. And so we feel, they feel, or some of the analysts feel that India is a better option to invest into if you are a global fund manager. And here I'm going to probably burst that myth. There is no, I mean, if we take nationalism aside, I love India, and I've always supported India in terms of how they play cricket, sports, etc. And I made a lot of you can say videos on that as well. But taking into consideration as to how things are panning out with respect to numbers, it doesn't match up, and that is where the problem lies, because whatever that is being fed on different you can say medium, whether social media or on television, it is a slightly different picture to what is happening globally, what is happening especially in the US compared to India. So let's just compare. So Nifty is at around 26,100, 26,060 or so. uh, what is the Nifty EPS at the moment? So Nifty EPS is around 1150. Let's just round this off. So if you see here, the Nifty EPS is around 11. So this is the Nifty EPS 1148. Let's round it off at 1150. The value is 26,070 or so. So if we do the math, the Nifty PE comes out to be 22.7. Now, considering, let's say, so this is the September quarter numbers. Considering the next two quarters go in line of what has happened in the previous two quarters, then what would be the Nifty EPS for FY26? Nifty EPS for FY26 is estimated to be, if I add on like this, so this is estimated to be somewhere around 1180, 1182 ish type. So 1182, let's say 1182 is your Nifty EPS for FY26. And let's say the stock market, or the market goes up another 2-3% from here. So if we say the market is around 26,500 by then, because people are saying that okay, we are not hitting new highs, etc. Let's say it hits new high in December, January or so, and we take the March quarter numbers, so 26,500 on 1182, we are probably trading on FY26 basis at around 22.4 times. So we are trading at 22.4 times. If we go to say 26,500, just 500 points more from here, we will be trading at 22.4 times. What was the Nifty EPS, if I ask you, in FY25? What was the EPS? So the EPS in FY25 was 1110 rupees. It has grown to 1182. Let's say it will grow to 1182. So the growth has been 72 points on 1110. That's around 6.5%. So you have a Nifty EPS growth of around 6.5%, and Nifty trading at 22.5 times at 6.5%. So that's 3.5. The standard deviation, or the you can say multiplier of the Nifty EPS growth to the PE is 3.5. Now that is significantly higher of what normally markets trade at. Normally, markets trade at between two to maximum three times at best. Three times at best, if you consider that okay, it's an emerging market, growing market, and probably one of the sectors are doing extremely well, then you would say okay, three times is probably stretched in that regard. So that is why I believe that this market is extremely stretched. I believe that there is a room for at least a 10% correction, maybe a 15% correction in Nifty, and a similar correction in small and mid cap. So why is the correction not coming in? Because there hasn't been a substantial correction in the Nifty over the past 6-8 months. I have not seen it. So if you look at this is the 1 year chart. If I take out a 1 year chart of the Nifty, then it has gone up and down, but not a severe dent. So if you look at in April, during that crisis of the you can say tariff war when it started, we were at 22,000 or so, around 22,000 or so, 22,200. Actually, we have gone on to be substantially higher. So if I take that figure and take 26,100 from 22,200, we have gone up 17% on the Nifty over the last uh, probably 8 months, last 7 months. 7 months we are up 17%, although earnings are only up 6.5%. And there lies the dichotomy, and there lies the problem for me with respect to the earnings. And and you'll understand it when we look at the picture from the US front, from the front of how US is doing in terms of their earnings, and then you'll understand. It says like in cricket that if one team has played in a test match on a pitch, it would be more feasible to look at how the other team has played and then assess as to how the pitch is doing. So let's see how the pitch is doing. So let's come back. So understand this, that Nifty is trading at 22 and a half times FY26 earnings, and based on 2026 earnings, how S&P 500 is doing. So this is S&P 500. This is the quarterly earnings estimate. So that let me give you an idea of the last 4 quarters as to how. So this is all quarterly estimates. If you look at here from 2024, 2025, each quarter 26. There the year is from January to December mostly. So in 2025 till 2025 December, which is this year, they will do an so I have added these four figures, I'll tell you. So these are the four figures I have added: the estimate for December, the current earnings of September, June and March. So these are the four earnings for 2025. Let's add them. Let's see where S&P 500, where actually 493 companies are not doing that well. 7 companies are doing well. So if you look at their earning, then we are looking at a situation where 53.89 in the March quarter, they did 58.96 in the June quarter, 66.84 in the September quarter, and 64.43 in the December quarter. So they are expected to do around 244. Let's round it off at 245. So if they do 245 rupees of earnings, let's see where the bubble, so-called bubble market of the world, US is doing. So at $245 for FY25, not 26, FY this year 2025. The S&P 500, when it got up to 6600 yesterday, on Thursday, it dropped to 6520. 6520 was the low yesterday in that 2.5% decline. And if we take 245 as the earnings, S&P 500 is trading at 26.6 times. So it's trading at 26.6 times FY 2025 earnings, in which 1 quarter earnings is left. 26.6 times. What has been the earnings growth trajectory? So the earnings growth is 14%. 14%, 14 to 14.5% is the earning growth, and it is trading at 26.6 times. Now what is the you can say the final weightage that comes through? If we divide 26.6 from 14 point, let's say 14.2, let's not take 14 and a half, then we're looking at 1.8 times. Again, as I mentioned, that normally we say that trades at around 2 times the growth, and growth is around 14% to 15% for the S&P 500. Yes, growth is exponentially high in the big seven tech stocks. Growth is not there in the other 490, 493 stocks. There is a lot near recession type situation in many consumer kind of stocks and real estate and all that. But there is a lot of growth in the tech stocks, but overall they are growing at 14.5%, and the market is trading at 26.6 times on current earnings. I'm not talking of forward earnings. Let's now look at forward earnings. So FY26 or in 2026, they are expected to grow at around 14% or so, just over 14%, let's say 14.2%. On 245, they are going to do something like 280ish or so. 280, they are saying 281, 282, let's say 280. So if they are going to do 280, then we are looking at a situation that they are trading at somewhere around, if they are trading at 6550, for example, the S&P is around 6600, let's say 6550. At around 280, they're trading at around 23 and a half time 1 year forward. What is nifty trading at 1 year forward? Let's say in 2026 they do 1182 nifty. In 2027 the growth slightly even increases from here at 7%. Then we are looking at 1264 or 1265. On even 1265 at 26,000, I said 26,500 could be the high. On that at 1265, even on 1 year forward, Indian markets are trading at nearly 20.95 times, let's say 21 times. We are trading at 21 times FY27 earnings, growing at around 6-7%, let's say 7%, so at a multiple of 3 times the growth. It would be in the best case scenario if the growth increases to 7%, then the multiple is 3 times of the growth that the nifty will trade at if we are trading at 26,100. Whereas if you look at S&P 500, if this 14.2 continues, which is expected to be there because there is a strong guidance by Nvidia, there's a strong guidance by Google, Microsoft, as well as Amazon with respect to their earnings next year. And remember that these companies account for nearly 14% of the total earnings that come through. That's a big chunk. So if you look at S&P 500, their earnings are expected to be $280 altogether in 2026. And if we take 6550 as the current level, or let's say even 6600 as the current level, at 280, we are trading at 23.5 times, growing at, as I said, 14.2 or so, 14.2%. So the multiple here is 20.6 actually, and not 21 at such growth. So that's my point, that we are in a situation. If you look at 23.5 is the, you can say, the P, and the growth is around 14.2, so the multiple here is 1.65. The multiple in India's case is 3, and that is my worry, and that is what the analysts are not telling you with respect to the Indian markets. I believe that there is a decline possible. Anything that goes wrong in the Indian market, we could see a 10-12% decline for sure, or we could see a meandering situation in which the market, yes, goes up, makes a high, but eventually there will be problems in the market, there will be fall. Individual companies will do well. Companies that are growing at between 30 to 70%, 100% in terms of sales growth will continue to attract more money, especially in this market in which other companies may not perform that well, and eventually there will be a few companies, maybe 10% of the total Nifty 500 companies, that will end up doing extremely well. Maybe 5% of them, 25 to 40 companies, that will do extremely well over the next 2 years till the growth comes back. What is a growth? Growth of more than 10-12% earnings growth. Till that time, I would say that will continue to struggle on this front. So that is about the comparison of the market. In terms of Bitcoin, what I believe is that uh, the massive selling that took place on October 10th. So if I just make it a 1 year chart of this, and if you look at here, we are, so if you look closely, so this was the selling. On October 10th, there was massive selling by a lot of players. And eventually what happened was Bitcoin went from 122 to 109. Eventually next day going to 106. Let me see. Yes, $109 or so, 109,000. From 120 to 109,000 in just a matter of 2 hours. And that happened because there was a lot of liquidation of long positions that was taken on leverage. 10x, 20x, 50x leverage. What is that? You put in $1,000 and you buy Bitcoin for $50,000, and then you take in that position for 1 day, 2 day, and just like that. And eventually if you are down, then the broker will itself cut your position, and eventually millions of such positions were cut off and the accounts went totally under. So that's what happened, and that selling had a domino effect, and we saw from 109 the way everything catapulted, and there was massive selling from BlackRock. I feel that was from where selling were coming in, and other, you can say, institutions that was selling. And eventually we went to this, and have a look at this strong volume on which a bottom was made and a close was higher. So we made a bottom at 80,000. We started at 86,500 and eventually closed at 85,000. And from there on in, Bitcoin is trying to claw its way up. So I believe that already we are down. If we take 126,200, 80,500, we are already down 38% from the top, and that is a crushing blow for those who believed that 2025, and even I was one of them who believed that 2025 could be a bull year, because 21, 17, 13 and 9 have been. So now what is happening is that Bitcoin will behave with lesser volatility and lesser returns. So my expectation is in 2024, Bitcoin was around, if I go back here, let's say 24th December or so. We need to go all the way back to 2024 and December or so. So here we are. So in 24th December, Bitcoin touched a high of 108,000 or so, $108,000. From this 108,000 24th December, even if Bitcoin comes back, I think it will be around 100,000, 95 to $100,000 by end of December here. So we could have a negative year, slightly negative year this year. From 24th December up till 30th December, next 6 years, I would believe that Bitcoin would grow at between 30 to 40%. So let's say 35% or so CAGR, which is still extremely good compared to other asset classes. So I think it will do around 35% CAGR from these levels. And so you can probably calculate as to how or what price it could be by 2028, 29, 30. And it's a long-term asset. Remember, this is something that is extremely less inflationary. There is inflation because a little bit of bitcoins will be mined there, but after 21 million bitcoins that would be mined, I don't see so after 20.2 million in 2028, the Bitcoin price is going to surge even more, going from 28 to 32 and so on and so forth. So as more Bitcoins are mined, by 2032, it is expected that I think 20.4, 20.5 million Bitcoins would be mined. Around 600,000 Bitcoins would be left. That would be mined over a period of 100 years. So from 2032 onwards, this asset class is going to just go berserk. So what I feel is somebody who is invested into it, who have bought into it, need to probably have a decently long term time horizon. This is a very nascent asset class compared to gold. Gold has been there for I think 400 years, if I'm not wrong. Uh, we are looking at Bitcoin being only 15 years or so. So this is going to be very big post 2028, from 29 to 35, 36, 20, 35 or so. So yes, you could trade till 28, but eventually when you buy after 2028, hold it for a 10-year time horizon and you could see, I don't know, you could see big numbers on Bitcoin once that happens, because there have been big market players who have bought into it. Don't take it as as an asset class that could go down 80% easily. Now I don't think that will happen. A 38% decline has happened. Probably next time around it will be 25%, and the volatility will keep on decreasing, but this will keep on increasing and this will explode post 2028. That's my assumption with respect to Bitcoin. So that's Bitcoin for you. So this was a video on all assets and whatever that is happening in the global markets. Let me know how you like this video. This is a slightly different video to what I normally put up. Do subscribe to my Patreon network and support me on YouTube by subscribing onto it. I need more subscribers. Kindly do that. Thanks a lot for watching.